Silicon Valley's housing market just hit a major turning point. After years of crazy bidding wars and record-breaking prices, sales volume has dropped, price growth it has reduced, and buyers are finally getting some leverage back. You have the uncertainty of some tech layoffs relative to AI and immigration, but mortgages have dropped. So what seemed like an unstoppable market for years, maybe some things may be shifting. However, it's not happening across all of the Bay Area, and definitely not across all price ranges. I've analyzed this data city by city, and this shift could mean that there is a window of opportunity where using the right strategy could save you hundreds of thousands of dollars and finally entering the city that you've been trying to get into. Let's dive into it. Silicon Valley still has some of the highest home prices in the country because the wealth is still tremendous here. But what's changed is how fast prices have been rising across the board. We're not seeing that incredible growth from 2020 to 2022 anymore. But the thing is, it's varied across different cities. Check out these numbers. San Jose's median price, $1.35 million, down $50K from last year. Also, number of sales are down from 542 last August to 509 this August. Not a crash, but a slowdown. Meanwhile, this stat isn't across the board though. Palo Alto as an example, 33 sales last August, but this August, 50. Be careful when competing median prices in some of these smaller cities though, because just looking at 1 month in a city doesn't have much transactions makes it very difficult to find a median price. This unevenness of price growth creates some interesting opportunities though for buyers in certain neighborhoods, which I'm going to show you exactly how to take advantage of later on when we talk about buyer and seller strategies. Across pretty much of all of Silicon Valley, homes are taking more days to sell, and sales are down about 6% from last year. Slowdown, but really not crashing. But here's what most agents will tell you. This isn't a uniform market shift. Some neighborhoods are cooling much faster than others, some barely cooling at all. It's different city by city, and none of this is happening by chance. The tech industry has always driven Silicon Valley real estate, and what's happening there is directly affecting home prices. If this is your first time here, I'm Spencer Su. After spending over a decade as a tech professional in Silicon Valley, I now use that insider knowledge to help families make smarter real estate decisions in this market. I break down the data neighborhood by neighborhood so you can spot opportunities others are going to be missing. If you want to stay ahead of these market shifts and see which cities may appreciate the most in the coming years, hit that subscribe button and turn on notifications, because I promise no fluff, just actionable insights based off of actual data. But before we dive into specific neighborhoods, let me tell you what's really happening with these tech companies that drives our market. The big tech companies have started slow hiring, and many have cut jobs. You think about Google, Meta, and Apple, they've slowed their hiring significantly. Some worry for many potential buyers. It's not going to be uncommon for a 10% rift across many companies that you may not even heard of. But here's a catch. Look at the general NASDAQ stock performance of most of these companies. If you're still employed, which is still millions of people here, your company's stock is generally better than ever since the stock markets are at record highs. Now you pair this with a tighter job market where you have a strong return to office mandate. Why do you think traffic is so bad now? This is why areas like San Mateo County and San Francisco, along with Silicon Valley, has done so well, while places that are further out have been going through struggles. Now, certain areas are still very competitive. Most luxury markets are doing very well. I've seen an analysis for a client that is searching in a range of $10 to $15 million. In that market, a third of the homes are selling in a month. 25% of those homes are bought in all cash. Now, a third of those homes are also overpriced and won't ever sell. So you literally see a divide where sellers not willing to adjust to the market are just going to be hanging around. So who are those people buying these $10 to $15 million properties? Let's talk about the AI boom. Companies like Nvidia, now worth fluctuating in the range of $4 trillion, are creating a whole new wave of wealthy buyers. Think about it. Many Nvidia employees are millionaires before they even hit their mid-20s. They're buying homes in cash without breaking a sweat. Imagine people that worked there for a decade plus. They are easily 10 million plus. Imagine if you're an executive there. You are 100 million plus. Just do some basic math. Nobody likes to talk about it because it's incredible and amazing to see. I've watched these AI professionals compete over homes in certain neighborhoods, but which areas are they usually focusing on? I'll get to that in a bit. Now, you might be wondering, with all these layoffs, are we actually seeing more homes hit the market? This leads us to another crucial piece of the puzzle, which is inventory and supply. Let's focus on Santa Clara County for this stat, just to give you some perspective. We will likely never hit pandemic level of sales probably ever again. 1,750 homes a month in August. Right now, over the last 4 years, it's been consistent though, 1,250 homes. The months of inventory went from the hottest of times in December 2021 of 0.4 months to now consistently about 2 months. While other markets show this as a seller market, because the Bay Area was much faster than other markets, this is already shifting to be mentally more of a buyer's market. So where can buyers then find deals in this market? You gotta still focus on your payments to determine what you can buy up to, because there are naturally going to be cities and neighborhoods that will work. Condos and townhomes have been weaker than single family, so as long as it's not a deal breaker for you, you can get some really good discounts right now. Also, the other opportunity is new construction. They've been offering amazing promos and deals. Within the last week, I helped my clients get in a contract because the builder was offering rates in the low to mid fours today. They can do this because they can subsidize that loan. This is not a one-year promo rate. This is a locked-in rate. I'll have to share, if you do consider new construction, do not go on your own. Reach out to me as I can represent you at no cost to help you figure out the best deal possible and take advantage of these deals. But I do need to go with you for the very first time to be able to get credit, or you're gonna have to be on your own and you're not gonna get any benefits with working with a trusted realtor like me. To give you perspective, I've helped a client save $180,000 in a new construction townhome, something I've never heard of throughout my entire career of helping over 300 families to move. So wait, while there's tremendous deals to be had, we do need to talk about the elephant in the room, which is affordability, because these higher rates over the last 3 years have changed what people think they can afford. So let's talk about it. Are rates going up or down? What is going on with rates? The good news is that most rates have been now in the low sixes, which is the lowest for the entire last 12 months. For jumbo loans at these higher price points, it is not unusual to already see rates in the low to mid fives readily available. The interest rate discussion is more of a mental block though than it is for an actual affordability block. Do some quick math. A 1% change of interest rate on a calculator is equivalent to 10% on your monthly payment. So as you can see, it'll help a bit, but it's not like you're going to be able to buy all of a sudden double the price because of it. So that brings us to the most fascinating part about this market shift: how dramatically different things are from neighborhood to neighborhood and asset types. Some areas have much less buyers, while others you will still see 50 to 100 people plus come through an open house. Let me break it down for you. Now, the market will vary a lot from area to area. Some places will still have bidding wars, while others are giving buyers room to negotiate downward, which is unheard of, a rare opportunity for the first time in years. First and foremost thing you gotta keep in mind though is it always depends on how the sellers have their list price, which will be out of your control. Think about this. Tons of people don't know any better and are wasting their time touring homes if their max budget was 1.7. Or even worse, those buyers that don't even have a 1.7 budget and just think they can just lowball every home. Never assume the fair price is the list price, but compare it to what has sold lately, whether in the few months or recently, whether it's something that's sold in the last few months or something even in the last few weeks. Next, you gotta focus on the commute. Due to the return to office strong mandates, the closer you are to work, as long as it's a single family home, the higher the price and more competitive it will be of a general battle. Don't be surprised by this. You're doing it for the same reason as everyone else. However, even if a good location is there, condos and townhomes are still weaker as many buyers hope to just land a single family. Lastly, with more options, many buyers are pickier. Those that aren't fully remodeled tend to be less desired, or some layouts that aren't as optimal, they do get skipped. So what does this all mean for your next move though? Let me break down exactly how to take advantage of this shifting market, whether you're buying or selling. Buyers, for you specifically, you've got more leverage than you've had in years, but don't think you're the only buyer with money. This is still an amazing time though, because these are still awfully short-lived and rare times. Miss this, and a few minutes later, you may be in a trajectory going back upwards, and you may be wishing you can go back in the time machine and compete against a few people. For now though, don't be shy about asking for some closing help, especially in bid situations that don't have multiple offers. It's not uncommon to get closing clause covered or for sellers to help buy down your rate if that is important to you, because at the end of the day, it's a net to the seller. So whatever you need to do on your side to be comfortable, go for it. Sellers are going to be more willing to work with you than they have been in years. Just make sure you're pre-approved before you start shopping. Don't have a budget of $2 million and keep looking and dreaming of these $2.5 million homes expecting it's going to work. You're going to just set yourself for failure. Think about this. Imagine if you're like bringing your fishing in a swimming pool to catch fish. Unless I know there's some history that there's fish there, why would that work? Now let me switch gears and talk about the seller side. The days of just expecting record high numbers is not likely unless you have a completely updated or a remodeled gem in an area. Be patient with home sales, but also realize there may be just only a few end user buyers that are out there. Getting your home as updated as it can be, leveraging our stagers, our advice, professional videographers to do lifestyle stories matters more than ever, because buyers have options. We need to do what we can to convince that one buyer your home is the best one, and not only that, make sure they bid on that home. If you think about it, the stock market is still at record highs, so while the hottest of times are over, there are still plenty of people out there making moves every single day. Now to reverse back to buyers, don't think about new construction with builder incentives throughout the Bay Area. Builders have the ability to offer rate buy down, lower their costs, lower their closing costs, lower their price, give you upgrade packages that can be hundreds of thousands of dollars right now. This is a little secret that others may not tell you. This window of opportunity through the history of things might be much shorter than you think. Usually when we have these low periods, unless we have some sort of giant crisis, the government tends to take action to Fed customer rates, which brings back excitement and buyers back in. We are already expecting at least a 25 basis cut and potentially a 50 basis cut for the next Fed meeting. So last time this happened was usually a few years ago. We saw a pretty stellar bounce back up after a few months. Now, while I can't predict the future, don't complain again if you do miss out on this window. Silicon Valley's housing market is going through a transition, moving from that crazy seller's market that we saw many years ago to now something more balanced where people are still moving, but it's not as hyper competitive. Buyers in general have more options and negotiating power than before, while sellers need to be more strategic about pricing, preparation, and strategy. The key to winning in this market is understanding how dramatically different things are from neighborhood to neighborhood and price point to price point. So if you're thinking about buying or selling in the Bay Area, in Silicon Valley, email me. My calendar link is in the description for a free consultation to go over a game plan. I will help you navigate this changing market with strategies that actually work in today's condition. If you enjoyed this video, check out this other one here where I reveal the Silicon Valley neighborhoods that I believe will be the strongest growth over the next few years. Thanks for watching. I'll see you next time.